Good morning, Steve Freed with the morning grain comments. Markets are higher, led by nearby wheat and also soybeans and corn is kind of a follower. I think the main news overnight was in the beans. Looks like there's a little bit of moisture that's going to arrive across the navigational river situation. So when the Gulf was working maybe 50% of capacity, now it could be 70 or 80% of capacity. There's a large block of barges that now can move to the south and barges can move to the north, which relieves some of the pressure on the basis levels and also is helping futures. We also note that China's back from holiday. Their crush margins are record high, and there is some hope that they could come in and buy some U.S. beans. Certainly the Chinese-U.S. relationship is stressed a little bit right now, and up till now, the concern was that given a record South American crop, they might try to get by with as few beans from the U.S. as possible. We also note that in the wheat market, there was an attack on a key bridge between Crimea and Ukraine, and that bridge was bombed. And so there's some people think that while last week there was talk about Russia extending the corridor of Ukraine exports, there's now talk that maybe that extension will not happen. It's interesting that we've got this week a USDA report, and there's going to be a lot of moving parts, and we'll see how aggressive the USDA is going to be versus the average analyst. But most people look at a soybean crop at 43.27 with a bigger carry-on at 274. Crush is 22.55, but some people are using exports as low as 19.80 versus the government's 20.85, what gives you a carryout at 259. You plug that into about 1.5 million more acres next year, a trend yield of 52.7, maybe 100 million bushels more in the crush, and maybe 50 million bushels more in exports. You come out with a carryout of 407, which is negative to the November 23 contract. Over in the corn, kind of similar in that you've got a carry-in of 1377, maybe a yield of 171. Domestic usage as far as feed and residual up to 50. The ethanol usage maybe down 75. Exports down 275, which gives you a minimum carryout of 1067. You plug in 3 million more acres next year, a trend yield of 180. Feed usage up another maybe 200, crush for ethanol 50, exports unchanged, you get a carry of 1772. Over in the wheat, you've got a smaller crop, 1650, a little bit more imports, a little bit lower food usage, a little bit more residual, and a little bit lower exports. Still come out with a minimum carryout of 578. So that report could have a lot of surprises if they don't make a lot of changes, which would be positive. But if they do make some of these changes, it might actually be a little bit negative. So these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.